This is third learning objective of first chapter, Accounting in Action. State the accounting equation and define its components. So accounting equation is assets is equals to liabilities plus owner's equity. It's the accounting equation. So basic accounting equation provides underlying frameworks. Underlying framework means the foundation, the fundamental framework for recording and summarizing the economic events. And assets are claimed by either creditors or owners. So in this, the two terms, first is we will record the fundamental framework. It provides fundamental framework of recording and summarizing economic events. Second, assets are claimed by either creditor or owner. And in third, business is liquidated. Claims of creditors must be paid before the ownership claims. It's the basic accounting equation, and in first component of the basic accounting equation is assets. Now what are the assets? Assets are the resources a business owns. The resources, all resources of the businesses and wherewithals of the businesses are the resources comes in the first asset. And provide future services or benefits are also the assets of company. Cash, supplies, equipments, etc. The equipments, all equipments of the company are assets, and cash, supplies and other services or benefits that it provides, they are the assets of company. Now this was the first component of accounting equation. Now second, liabilities. Liabilities are the claims against assets. They are the claims against assets like debts, obligations of on company, creditors, parties to whom money is owed, accounts payable and notes payable. The company have to pay accounts payable within a year and notes payable also. And salaries companies pay the salaries to its employees, wages and wages payable, etc. They are the liabilities on company. Now we have covered two components of accounting information, first assets and then liabilities. Now we will plus the owner's equity. Now what is the owner's equity? Let's have a look. Ownership claim on total asset. Now the total assets, what is the portion of assets owned by its owner, referred to the residual equity, investment by owners and revenue. This is the plus. We will plus the owners investment and revenue which company generates, and when we do business what capital we earn, it's our revenue. And drawings and expenses, we will minus drawings. Drawings means the amount which you use for your personal and other expenses which are related to business, but the drawings are not related to our business expenses, they are the personal expenses of owners. We have covered three components of basic accounting equation. Now owner's equity, expanded accounting equation. It's the expanded, and we will add something other things in expanded accounting equation. So basic and expanded. This is basic assets is equals to liabilities plus owner's equity, and in expanded equation we will assets plus liabilities plus owner's capital. Now owner's capital is the amount that is invested by owner and owner's drawing which he or she has withdraw for his personal use, and plus we will it is minus, and then we will plus Revenue we have already discussed that the capital or amount that company generates from its sales or business, and then it will be plussed in the equation, and we will minus the expenses which will occur during the manufacturing or any providing in services. So increase in owner's equity. Now what will affect in increasing the owner's equity? Investment by owner are the assets that owner puts in a business, and revenues result from the business's activity entered into for the purpose of earning income. The common sources of revenue are the sales, fees that we will receive, and service commissions which we have provided, interest that we will receive, and dividends, loyalties, and rent. Now what will affect to owner's equity? That the decreases in owner's equity. Now when we withdraw the money, and drawing in, owner may withdraw cash or asset from the for personal use, it results in decrease. The expenses, the cost of assets assumed or services used in the process of earning revenue, they are called as expenses. Now common expenses are salaries expense, rent expense, utility expense, and tax expenses, etc. They are decreases in owner's equity. Now we have covered the third learning object. Now do it. We will check our knowledge that we have appropriately learned or not. Classify the following items as invested by owners. Owners drawing revenue or expenses, then indicate whether such items increases or decreases owner's equity. So we have to classify that if they increase or decrease, what will affect on owner's equity. So first is rent. We have learned that the expenses increases, then effect on equity decreases. Salary service revenue increases, it is a revenue and it increases the equity. Drawings, if we withdraw the money, the effect on equity will be decreases, and salaries and wages also decrease our equity. This was all about the third learning objective. Stay connected for coming fourth learning objective of first chapter. Thank you. If you have any kind of question or suggestion, kindly drop in comment box, and for getting upcoming uploads, kindly do subscribe and click on the bell icon. Thank you.